Hey, what's going on? Welcome back to the channel. In this video, we're going to be taking a look at DSLA protocol. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. If you haven't seen the previous update, make sure to watch that before watching this one. It's going to be linked in the top right-hand corner of the screen. Now let's jump straight into the TA. Taking a look at the daily chart, you can see that we are retracing from this local high that we printed in April, and we're already down 72%. So if you still don't have a position in DSLA protocol and you're looking to start building one, this is where I would start doing that, because a 70% pullback from the local high is a pretty significant pullback, especially if you consider the current market cap of this project. I think it's below $10 million. So the market cap is extremely low, and with that, you don't really expect the price to come back to this major low, because that would still be quite a huge pullback from even where we are right now. That's like another 70% down, but from the April high, that would be a 92% pullback. So that's quite the pullback there if we're gonna, drop all the way down to 0.303443. So to be on the conservative side, we are expecting 0.00089 cents to be retested. If for whatever reason we do drop lower, then just keep averaging in. But this is where I would expect the price to drop if we continue with this downtrend. That's another 36% down. If we have any flash crashes, any black swan events, there we can potentially see wicks to the downside even below our local bottom here that we printed in January 2023. So if you want to be on the safe side, you can set up some buy limit orders above 0.0005865 and above 0.0008910. So these are the two fib levels that we're going to be targeting: the 0.618, the golden ratio, and the 0.786. And as you can see, the fib is set up from the swing high that we printed in April down to the swing low that we printed in January. So a bounce off the golden ratio and a continuation of the uptrend would be a very, very bullish possibility, but we don't know what is going to be happening. But just to reaffirm this, the golden ratio is one of the most important level of the entire fib. So this is where we're supposed to see the bounce if we want to see a healthy continuation of the uptrend, because if you end up breaking below the golden ratio, then the chance of retesting the local low here is increasingly getting stronger. Because if it's the other way around and you're breaking above the golden ratio, well, if you break above that, the chances of retracing back to the local high are far greater. That's just the way it is. So the golden ratio is sort of the gateway to either the local low or the local high. Now, taking a look at the daily RSI, you can see that we landed below the green trend line, which was our support trend line, but we ended up having a bit of a fake out there. So just to kind of update this and have a better trend line, what we can do is, or a more accurate trend line, we can use this local low from December and we can add that to the chart, and this is going to be our local trend line or local support trend line that we're targeting. And any bounces, any touches you see off of that is going to be a good entry. So we almost had a bounce here in May, we had a bounce in June, and obviously the initial bounce happened in January 2023. So these are the points that I would be looking at, or this is the trend line that I'd be looking at for entries. To be honest with you, I would start entering right now, because like I said, once again, we're pretty overextended to the downside from the local high, and this is a low cap gem project, guys. You have to keep in mind it did a 15x here. What was that? A 12x. Okay, a 12x from January to April. So it is possible we're going to be seeing something similar by the end of the year as well. So let's switch over to the weekly chart. And before we continue with the video, I quickly want to mention my Patreon that's linked down below in the description. If you enjoy my content, you want to get more exclusive content, and you want to support me at the same time, definitely feel free to check out the Patreon, because you're going to get a 7-day free access on my Patreon and an instant access to all of my content since October 2021, which is when I started. You'll get access to content like exclusive weekly podcasts, and we're starting to invite guests already. We have 40 plus low cap gem posts. We have a bunch of project reviews. We have a bunch of resources that are going to help you save time and make more money with this upcoming bull market. So this is definitely a great exchange of value for the both of us. And once again, there's a 7-day free trial. Feel free to check it out. You can leave anytime, and let's continue with the video. Now, switching to the weekly chart, if we take a look at this Fibonacci retracement from the swing low in January to the swing high in April 2021, you see that we have retraced to the golden ratio here, and we've rejected, or we got rejected from that point, and we got sent back down even below the 20 EMA. So 0.001162 is going to be a major support level based off of this Fibonacci retracement. So let me add that price tag in there. So this is something that you can be targeting, but once again, we're below the 20 EMA, so we are no longer in this uptrend, and we should be expecting a retest of either one of these local highs, these previous local highs. So you have one high here, which is sitting exactly at the 0.236 fib, and we have this local high sitting at 0.000847, which is what we looked at the previous daily chart. So on the weekly chart, if we jump into the RSI, you can see that we were overbought here, sitting at the index of 81, and finally we have pulled back down, and this is where you can start accumulating, because you don't want to be buying in when you're seeing these huge moves to the upside. You actually want to be buying in once you're sort of bottoming out, or once you've reached a certain support level that you were targeting. In our case, it's one of these local lows or local highs that we're targeting. Now, if we take a look at the volume indicator, you can see that we had some good volume coming in, but not as much as we saw back in 2021. So obviously, once we get to the bull market, there's going to be more volume, hopefully more than we saw in 2021. And by this, in looking at this Fibonacci retracement, our minimal target is going to be at almost 7 cents here, so 0.068 cents. That is the 1.272 fib, and we also have the 1.414 sitting at 11 cents, 11.5 cents roughly. So these are going to be our major bull market targets, and if we manage to break above that and we start pumping even higher, then we have 25 cents, almost 26 cents at the 1.618. But obviously we have to be conservative, and I can't really, I don't really expect us to hit 20 cents even in the next bull market. So I would say 10 cents is where you want to be taking profits. But it also depends on where Bitcoin is. So if we get to 11 cents before Bitcoin even breaks 100K, then there's a good chance that we're going to be seeing, at least 15 cents, 17 cents. So at that point, you can take some profits at 10 cents and just start gradually averaging your way out of your positions as we go, as we go past 15, 16, 17 cents all the way up to 20 cents. That's just one way to look at it, because Bitcoin's price is going to be playing a huge role, in these sort of situations where you're deciding to whether to take profits or not. If we take a look at the stochastic on the weekly, you can see that we're sitting in the oversold below the index of 20. So the last time we were down this low was back in December 2022. So this is a very good buying opportunity. The MACD has just printed a bearish cross, and you can see the last time that happened was back in November. Actually, no, that was back in May 2022, and we did see a bit of a retracement into June. From there, we had the massive move to the upside, and ever since, we were very, very bullish on DSLA. So where we actually printed the first bullish cross was back here. But you were actually seeing a divergence because you were going lower while you were printing a bullish cross. So the MACD is obviously a lagging indicator. So you got the bearish cross on the MACD May 15th, which is when you were sitting at the 20 MA. From the April low, or from the April high, that was already a 50% pullback. So you can see how late you could have been if you simply waited for the MACD. But you can also use the MACD to kind of look at what's potentially going to be happening. So once you have the bullish cross, that confirms your uptrend, just the way it confirmed it over here. So you could have bought in June, which was all the way back here, as you can see, and you could have had this massive move to the upside, which is approximately 6x Obviously, you wouldn't have caught this bottom here if you were not averaging in, but I'm just speaking based off of the MACD. Now, that is pretty much everything that I wanted to talk about here on this channel regarding DSLA protocol. I'm gonna buy in more tokens as we continue dropping. I do have a pretty good position already, but I just think that some other altcoins are sitting at more lucrative prices. But I'm definitely going to be holding this throughout this bear market into the bull market, and I'll be letting you know when I take profits. Obviously, my patrons will be advised first, and then I'll be talking about it here on YouTube. So thank you very much for watching this video. I'm gonna see you in the next one. Take care and goodbye.